This RBC report that came out last week really had some people scrambling, thinking that there's a massive correction on the way in all communities in Toronto. But the RBC report, which we'll go over with a detailed screen share in a moment, is not all that you might think it is. There is some great information in there, but really, does it apply to your community that you are living in Toronto? Not as much as you might think. So if you're new here, this is week 125, 125 weeks in a row of reporting on very specific Toronto communities that nobody else is really looking at in detail. We never discuss broad data here, broad areas. We're never going to talk about the 416 in general or the GTA. We're going to talk about where most of the Spring Team's clients are, and that's the urban communities of Toronto and all of the surrounding neighborhoods, right up to the 401, from the border of Etobicoke, all the way to the east end of the beaches, down to the lake, up Kingston Road to Highland Creek. A lot of specific communities that I am talking about. All the information is on the blog, thespringteam.ca/blog. And we're going to do a bit of a screen share and go over how last week went in Toronto real estate. So back to the topic at hand, this RBC report that came out. Let me just share my screen with you guys so we can see what's going on here. So is a historic market correction coming our way? I mean, 100% there are some serious properties out there that are selling for way less than they were in January and February, without a doubt. So, but right now, I just want to make sure you understand that RBC's report claims or predicts a 42% drop in the number of sales, not in prices. And remember, some of this 42% that they're predicting has already happened. So it's not 42% from now. We've seen a dramatic drop up to 60% in the number of sales, specifically for downtown houses and condos. So in a neighborhood where you would normally have, looking at the numbers, and again, we have this information week over week since March 2020. So don't be shy to dig through the website to go really deep to the very beginning and kind of see how things compare. Normally for houses, we have over 100 sales in a week, but we're down to 43, greater than a 50% drop in sales. But we don't have that much of a dramatic drop in price, but we'll get into that in a moment. With condos more specifically, we normally have up to 220 or even more sometimes sales in a week, but there's only 78 this past week. Now, some of that is attributable to a typical summer slowdown. It happens every single year. But it's not every single year that you have interest rates increasing as they are with inflation as it is. So two very distinct differences from a typical summer season or summer slowdown. Like I said in all the other videos that we've done, and you can go back and look at the past three, I think we've got 3 or 4 on this channel right now. We've looked at supply very, very closely as a good indicator of where the Toronto homeowner sits or how financially stable they are. And I will say this again, and I've said it over and over again. Toronto does not have a bunch of panic sellers that are over leveraged and need to just fire sale their properties and get as much cash as possible out. If that were the case, there would be a ton more listings available on the market. If you've been following my blog, thespringteam.ca/blog, you would know that 5 weeks ago, there were almost 2,000 units for sale in the same market area, which is the urban market. So downtown, like that Etobicoke border, Bloor Danforth beach border down to the lake, like that huge area, only 1,783 condominiums are available for sale. Like I said, we were approaching 2,000 and that pulled back. Some sellers were not getting the prices that they wanted. They took their properties off the market and didn't come back. They decided to rent. And we're going to talk about rents as well, because if you read last week's blog, or saw last week's video, you would know that the rental market, the way it is right now and the way it is moving forward, is going to be responsible for maintaining and holding the integrity of Toronto's real estate. That's one of the main reasons why we will not see a major price correction in condos and multi-unit houses. And also, for the record, this is the first time that I have seen condos outperform houses. It's always condos that take that hit, and then houses seem to always chug along. But with the rental market being the way that it is right now, it is propping up almost the entire real estate industry. I was quoted in a piece in the Toronto Star this morning, and I'm getting a lot of backlash and hate because one of my quotes is, I told them an example. Sorry, there's a garbage truck passing my house. That's like insanely loud. Let's pause this for a moment, shall we? Maybe not. Let's just come back. Hopefully you can't hear that. If you can, it is what it is. So it kind of got off track there a little bit, but the rental market is essentially what is, oh, that truck is so loud, what is keeping the market going right now. The interesting thing about the RBC report is it said that this is a welcome cool down. I'm really not sure how welcome this cool down really is, because it would be welcome if it made properties more affordable for people that weren't affordable before, or if it allowed some sort of relief for anybody. But the market, the way it is right now, offers no relief to sellers. It offers no relief to buyers, because some properties might be less expensive, but it costs them the same, or if not more, than had they bought when it was more expensive with the lower interest rates. So it's certainly not a welcome cool down in any way, shape, or form. It's caused the rental market to go absolutely bonkers, with massive 50 to 70% rental price increases year over year from this time last year. So it's certainly not welcome, and I'm really not understanding where that particular statement comes from. So to get the RBC report, you can just go to rbc.com, just Google it. You can read it in the Toronto Star or any other outlet that picked it up. But I like to just always go to the source. And here is their entire report that you can read. It talks a lot about how interest rates are trending, and really important to understand that we've been at these interest rate levels before, and we've thrived at these interest rate levels before, pre-pandemic. Now, the forecast is obviously going to surpass the pre-pandemic levels, and we've already have done that with some of the mortgage products that are available. So I'm not some sort of delusional agent that thinks that, oh, everything's just fine, this is normal. It's not normal, and it's going to be painful for the next 1 year. But that's the important thing. And what's that other line that I always say? You can't day trade real estate. So if you think you're not going to buy today, you're going to wait until next month because the property might be cheaper, that's fine. But what mortgage product are you going to be approved for at that time? Your mortgage rate hold, and hopefully you have one. If you're a buyer right now, like pro tip, if you are looking to buy right now and you don't have a pre-approval in place, there's no protection for increasing rates for you. So you must go out and get that pre-approval if you're at least 50% sure you're going to buy something. So go out and do that right now to at least lock in a rate for the next 90 days to give you some shopping time. And remember, a lot of the banks are building in the future, the future increases into today's products. Not all of them, but there are some products. If you're not a top AAA borrower in the bank size, you may not even qualify for the best available rates anyway. But what I'm saying is, waiting is fine. And if you're concerned about the market tanking more, that's fine. But it really just depends on where you're looking. At no point in recent past anyway, has urban Toronto real estate dramatically been affected by any sort of economic turmoil. The biggest effect in Toronto's urban markets is a massive reduction in sales activity, but our prices really haven't taken a major hit during previous incidents like this or moments like this. Suburban markets and the beyond suburban markets, so like there are the burbs, which are the suburbs, and then the burgs, which I call them, like the ones that are further out than the suburbs. Those are always more susceptible to big swings in prices and days on market and inventory during times like this. But the reason why I always will forego any sort of short-term cash flow opportunity, I will take security and safety and long-term almost guaranteed success over short-term cash flow, like 99% of the time. That's why I love urban Toronto. It's super resilient. I will always be an investor in urban Toronto, and if I see opportunities anywhere else, I'll go for it too. But anywho, I really encourage you to go through this report and really understand what it's talking about. Affordability is getting crushed. It was getting crushed when interest rates were low and prices were high, and it's getting crushed when interest rates are high and prices are lower. So there's really no winning in that scenario. So unless your income's gone up tremendously, you're really not in a better position today than you were before. So here's where it talks about where they get that 42% number. It's building in a number of it's building in a number of drops already since early 2021. So this is not like a new thing that's starting from today, like I spoke about before. And moving on from this, I mean, listen, I don't want to go over all the details here. But what I really want to make sure is important to understand is that RBC is not just some sort of doom and gloom situation here. They're talking about a correction, not a collapse. And that is something I want you all to understand. What's happening right now is a price correction in a lot of different property types, not all, okay? You're not getting a discount on every single property today. The biggest opportunities that exist in the market, we'll talk about this later, are in freehold houses and assignment condos. There are some amazing cash flowing opportunities in the freehold market and for assignment condos, but we'll talk about that after. RBC is discussing right here that this correction is expected to last until sometime in the first half of 2023. After we've had a number of aggressive interest rate hikes, there is going to be some downward pressure on rates as we move through 2023 as a recession eventually kicks in. As we've said, there is downward pressure on interest rates during recessionary periods, but the rates should remain high for about a year or so from now, perhaps less, but we'll see how that plays out. But let's not make any mistake about Toronto. We have solid fundamentals here, especially in Toronto. I'm not concerned about any other market, but the Toronto market is incredibly strong, is one of the strongest markets in the world. We have so many things bringing people here. It's not just people coming here to be with family members, people coming here to work in film, in technology, in crypto, in finance, in healthcare. There are so many industries that have made Toronto their hub that inevitably long-term success is inevitable here long-term, which is why I love Toronto even more. Those fundamentals have not changed. Long-term, my outlook and any successful real estate investor's outlook is 100% positive for Toronto, despite what is happening right now. So that famous line that realtors always like to rhyme off, oh, it's always a good time to buy and sell. I mean, technically, well, not buy and sell, to buy, really. And it is always a good time to buy, but it may not be a good time for you to buy. When we speak to our buyer clients, it's really important we understand their financial position, their goals, and what their lifestyle is to make sure that buying is a smart decision for them. And the answer is not always going to be yes. The answer might be, you know what, you've said you want to do X, Y, and Z. Well, X, Y, and Z might be in jeopardy if the market doesn't do what we want it to do in the short term. So you might want to hold off on buying. We've had these conversations before. So when I say something like you can't day trade real estate, I'm not trying to get you to ignore today's market conditions and just buy because I make money when you buy. I'm telling you that your future self, your retired self, will be a better retired self, a more comfortable retired self, if you have a real estate portfolio that you can slowly liquidate or use as income in your retirement years. That's an indisputable fact. But if you don't want to buy, fine, I don't care. Like, it doesn't really matter if you decide to buy or not. I'm just saying, I know that my retirement's going to be a super healthy and strong one because of my real estate portfolio. And I've seen too many clients miss out on too many opportunities because they were, too worried about the long-term value of Toronto real estate. And, Toronto is probably one of the safest real estate investments you can make on the planet, but I digress. So we can get back into the blog real quick and talk about some of these numbers. So what's really cool is that this chart here is, like I said, I've been doing this since March of 2021 or 2020. We've got all these data points over here. And you can just see how much more stable condos have been despite a few serious drops during like the meat of COVID. But remember, this is also when the city of Toronto put out a lot of rules and regulations that prevented Airbnb rentals the way they were being done before. So not only was COVID kicking the crap out of Torontonians at this time, we had the city of Toronto that thought it was a really great idea to release new regulation, to impose new regulations, which essentially had people that were already kind of uncertain about the future now being told they can't profit off of their investments. And nobody was really traveling at that time anyway. So I don't really know why this had to happen then. But anyway, it did. So that resulted in a lot of selling from rookie investors who didn't understand long term, or there was in such a hole with their property that there was no way it would cash flow with a long-term renter. They only could Airbnb the property. Luckily, most condos don't allow Airbnb, so it's not a major concern. But anyway, condos have been refreshingly stable, and they will always be a great long-term investment in Toronto. Now, I don't like to hold a condo past its 10th year of being a condo. I just don't like, the risk of what could happen to an older building, which could affect the value. So I like to flip it into a newer investment if that's what my assessment reveals. But for houses, you can see we were north of $2 million for a brief period here on average. But I wanted to talk about this average price situation here real quick, because at $1,447,000, that is true today with 43 with 43 sales over the past week, that is the average price of those sales. But what we're not seeing is a lot of those higher end urban properties on the market right now. What was really propping this market up were, of course, properties that were selling for $100,000, $200,000 more than they were today, for sure. But what's really affecting this average price number is those bigger properties just are not on the market. Like if you look back at the properties we have listed, like 166 Lisgar or 231 Grace, these like $3 million, $4.4 million semis downtown, they're just not on the market now. So it's not like those properties are selling for a lot less. They're just not available for sale because developers are holding their properties, or some properties are still in the process of being completed before they come to market. But more importantly, homeowners in that bracket are realizing the market can't support the prices that they want. So they're just holding them, which is removing more buyers from the marketplace, obviously, because these sellers would be buyers eventually. So it's just creating this cycle of depleting the demand side of things without really adding more to the listing side of things, which is what gives me more comfort and security in Toronto's real estate market. So looking back, and here's some of the neighborhoods that I'm covering right here. We got Toronto Urban North, which is the Rosedale, Moore Park, Deer Park, Lawrence Park area. You can see the mad fluctuations here, but honestly, these data sets are so small. Like when you're only talking about having 5 sales here, you got to take this data with a grain of salt. The most, populated sales, or the most, bigger data sets here, when we were at, these all are based on really huge numbers that are triple this, right? 43 sales in a week. We're talking like 100 to 150 normally. So a lot more reliable data here because we have bigger data sets to consider. And again, so let's talk about the opportunities real quick. The most significant opportunities that exist are in the freehold and condo assignment markets. Fantastic deals are available there, especially in the assignment market. But a lot of people aren't considering freehold properties as investments. Most people would assume a freehold property is something that they want as, a home for themselves. But when you look at a property like, for example, where are our listings? We have I can't even see where our listings are. There. We have our listings right here. If we go to the blog right here and we're looking at, say, 357 Rhodes, for example, this property right here, we have current listed at, actually it's dropped by about $80,000. We have it listed at 1.508 right now. This property would essentially cash flow rent for somewhere between $4,000 and $5,000 a month. And your expenses on this property are not crazy. And we've got these awesome investment spreadsheets here, which I can walk you through one-on-one, and maybe I'll even make a video about walking through one of these investments. But a lot of these properties that are normally end user, the buyer pool is normally full of end users, meaning people that want to buy it for themselves, would actually make some pretty awesome investments right now, the way the market is playing out. So I would really encourage you to look deeper into some of these numbers and see if it actually makes sense for you to jump into the market right now and pick up an investment that would have cost you 20-30% more a couple of months ago, especially in the assignment world, knowing that we can show you an immediate return with a tenant with very little vacancy opportunity in today's market. So, I mean, that's pretty much all I have for you guys today. I really want you guys to go through all these numbers. Understand how things are performing in your specific communities. We've got the Leaside Davisville area. I mean, this drop down here meant there was 0 sales, but again, a lot of fluctuation, but still prices are remaining fairly strong and in a lot of these communities. And one thing I want to make sure you guys understand is if you're sitting on any cash, there's a really good opportunity for you right now, but I really don't want you guys to be drawing on your home equity right now. It's not a smart decision to over leverage yourself at this point, unless you have a ton of room. Like if you've got a $1.5 million house with no mortgage, fine, take out like 500 grand and do something with it. But I wouldn't max out those home equity lines right now, because those are going to be susceptible to a lot of these interest rate increases, unless you can arrange some sort of like fixed payment situation or some sort of HELOC that is immediately tied to your mortgage, that whenever you make a mortgage payment, that money becomes available to you in a line of credit. That's the kind of mortgage that I have. You can choose to use it or not. But I wouldn't over leverage yourself in this market. I would definitely be leaving some room there as things get more expensive down the road. But right now you're going to get high paying tenants, and these tenants are going to give you a massive opportunity to create some wealth for yourself. down the road, your future self will absolutely thank you if it's the right move for you right now. But we need to kind of go through the numbers with you to make sure you're not going to get in over your head. One last thing I wanted to talk about before I wrap this thing up. Early June, I was working with the Urban Land Institute. The city of, so I was a former board member of the Urban Land Institute, a committee member, and really haven't been too involved over the past little while. But recently, as of this past June, I was asked to participate in a sort of think tank, a group that was going to advise the city on their expanding housing options in neighborhoods program. And what this program is this program is designed to facilitate more low-rise housing in residential neighborhoods to meet the needs of a growing city. Meaning that your house on whatever street it happens to be in, what we wanted to do, what we were advised, what we were tapped to advise the city on is how can we make it easier for people to build multiple units on their one single family lot, up to 4 units. And a lot of our recommendations were, and I have this in the blog for you to read later, a lot of our recommendations were actually adopted and will be passed into by the City of Toronto by the first quarter of 2023. So some of the recommendations we made, we can see them here in the PDF that I've got on the website. And there's my beautiful name right there amongst all these smart people that were involved in this panel, the technical advisory panel with the ULI. So we recommended that a lot of as of right opportunities were fine, but you know what, let's just go back to the actual blog where I talk about what actually matters to you. Like, fine, yeah, we want to make it easier for people to build, but even if you got the approval to do one of these things, the development charges that were in place would add hundreds of thousands of dollars to your expense line that it just didn't make sense for you to add multiple units. So further depressing the number of quality rental units available in the City of Toronto. And one of the partners in this technical advisory panel brought up a great idea. Why don't we condify, stratify these units and sell them like they do in Montreal with those with those wrought iron walk-ups in the front and stuff like that. So really great ideas came about. What we managed to get through to the City of Toronto, and I'm super proud of this. I've never been involved in an initiative that directly affected Toronto policy this much. So I'm super excited and proud that I was part of this thing. So now up to 4 units are going to be exempt from paying development charges. What this allows you to do now, this will allow you to actually be able to benefit from doing something like this and not have to fork out hundreds of thousands of dollars to add these units. This is going to create thousands of units in the City of Toronto. And sure, some people are going to, there will be smaller developers that will strictly use this as an investment vehicle, but there will be mom and pop homeowners that can now either stay in their home, stay in one of these units and have 3 other people paying them rent every single month on their path to retirement, or they can rent the whole thing out. Super proud of this. If you want to learn more about this, reach out and we will talk. But honestly, that is all today. Just I have one note for sellers. Please do not go to market right now. Like, you might get the number you want, you might not, I don't know, but this is not the time to be testing the market. Sellers, do not go to market right now. Hold on to your property, enjoy your summer. We'll see you in the fall. Call us to assess every single quarter, and then we'll tell you, we'll send you that text. Now is the time. I've got so many times right now where clients are like, listen, we want to sell this place. Just send us a message when it's the time and we'll go. I love that level of trust and I want to build that with you. But anyway, so that's it for this week. My name is Ara Memorian, managing partner at the Spring Team. Please subscribe. It would just make me so happy to get to 1,000 subscribers so I can do all these cool features. That's all. Have a great day and I will see you out there, springteam.ca. Peace.